Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I will be speaking about USDJPY because at the moment we do have quite interesting price action and structure. So first, I will be covering the technical side, then we will move to the order flow. Now, starting here from the technicals and the monthly time frame, what we can see is that we just got a very strong impulse and correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 of the Fibonacci taken on the monthly impulse, which is a very strong level of monthly support and demand, which we do expect the market to test and then to reject to the upside. We can also notice how that was lining up perfectly with this previous monthly resistance turn support, creating additional confluence of support at this area, confirming it as a strong demand area. Now, if we drop down on the weekly time frame, what we can notice is that we did have the creation of this overextended W formation, and after the creation of an overextended W, we do expect a rejection lower, which is in fact exactly what the market created after that. However, after an impulse and correction, in general, the market is at least supposed to try to create more bullish continuation as new buyers come in at the previous weekly resistance turn support, which is in fact exactly this zone here, from which all this move to the downside was created. The market then broke above that zone. At the moment is retesting it, and from here there is the possibility to see a potential rejection to the upside. Going down on the daily time frame, what we can see, however, is that first of all, I spoke about USDJPY a few days ago. While the market was creating this impulse here, explained all the reasons for which we could expect the impulse correction. And then from here, we wanted to see a rejection lower, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, at the moment, what we have is a market which created the impulse, correction, tried continuing lower, failed, printed a double bottom, and now is starting the move to the upside. Now, this could easily lead to the creation of a W formation. If from here the market will continue going higher, and after the creation of a W, we would like to see a rejection lower and completion of the W formation at the neckline. So if the market here will create a rejection to the upside, at that point, what we could be looking for is a potential rejection lower for the completion of the W formation at the neckline, which essentially would be this previous daily resistance, which at that point would be turned support. Now, if we go and see what we have when it comes to the commitment of traders, which is essentially the order flow. And this is what the non-commercials, so the biggest speculators in the market, are doing. And we check the data specifically for the JPY. What we can see is that with the last reports, net positions have in fact been increasing. We went from minus 102k. Now we're sitting at minus 65k. What this shows here is that from an institutional perspective, shorts have been massively decreased from 140k to 99k. Now this creates strength for the JPY, and strength of the JPY is exactly what we need if USDJPY is to create a rejection lower, right? So if the market will create this W, there is definitely the possibility for this potential move lower, and completion at the neckline is definitely possible. So if the market does create this W, how we could be approaching this potential move lower? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing at that point is monitoring price action during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this W formation at the neckline. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.